All right, so remember, folks, the Fed, when they embarked on this rate hiking mission, the idea was to take liquidity out of the system. Now, it is true, their balance sheet has come down. It was almost $9 trillion. It was $8.96 trillion, and it's down to about $7.4 trillion. That's a lot of money in 2 years. However, actions that were taken in the aftermath of the SVB failure pumped almost as much money back into the economy and into the system. Now, that cash is beginning to fade fast, and so the blue line you're looking at, that chart, is the cash fading, and as the cash fades, the big question is, will that yellow line, the stock market, go along with it? Joining me now, Hennion and Walsh, Asset Management President and CIO, Kevin Mahn. Kevin, I mean, the markets love that liquidity.
Yep.
So,
it doesn't.
Yeah, right? It's starting to fade away here a little bit. How concerned are you about the impact on the market?
I'm concerned about the impact on the economy. And the last time I was on your show, I suggested that the markets got a little bit ahead of themselves in 2024, pricing in the perfect execution of a soft landing by the Federal Reserve. Everything, Charles, that we've heard and seen over the last 3 weeks confirms that the forecast for a soft landing, I believe, is cloudy at best.
But there was a time when you thought it was possible.
There was a time when I thought it was possible. But then what did we see over the last few weeks? GDP comes in at 1.6%. The Fed is forecasting GDP growth to slow to 2% over the next 3 years. They raised their inflation forecast at 2.6%. That smells like stagflation to me. As a result, I still believe that rate cuts are on the table for later this year.
Really?
Yes.
So, and you said cuts, plural, more than one.
Correct. Right now, they're still forecasting, Charles, 3 rate cuts this year, according to the last dot plot chart. And there is a path forward for that.
Although a lot has changed to your point since that last dot plot. I mean, and Powell seems to have spoken to it. I mean, Powell's not saying anything. Last time he spoke, he sort of said, hey, listen, we're going to, at least the way I read between the lines, we're going to push these cuts out, but we're still going to cut.
Yes.
Now there's some chatter out there, scuttlebutt, that maybe they'll have to hike rates.
I can't imagine them hiking rates. If we think back to the last time when the Fed hiked rates significantly.
What about that GDP number yesterday and the prices on that? They erupted pretty high. Even today, PCE core was higher than expected.
Yes, but they raised their PCE core for this year to 2.6%. What was yesterday? 2.8%. Pretty much in line with what their ultimate forecast is. Yet they still kept those 3 rate cuts on the table. I think they might only do 2 this year, but they could still do 1 in July. Remember, Charles, they don't meet in August.
Would you rather have them err on the side of hiking once too many times or cutting too early?
I'd rather them obviously lean into the side of cutting too many times. That's obviously very bullish for both stocks and bonds. But I think back to the mid-1970s, the last time they cut too soon, inflation came roaring back. They're in a tough situation.
Yeah,
right
Powell
now.
promises he would be Volcker, not Arthur Burns.
That's
All right,
right.
so let's talk about earnings season.
Sure.
Coming into today, 59% of companies beat on revenue. That's a relatively low number historically.
It is.
Earnings, listen, they always find ways to beat on the bottom line. There's a lot of ways to do that, but are you okay with earnings so far?
I would rather see the breadth of earnings growth continue. Right now, technology is leading the way once again, just as they have in the markets over the last 15 months. It's forecasted the technology sector will grow earnings year over year by about 20%. Yet FactSet's only forecasting about 0.5% for the S&P 500. That's concerning to me. We need that breadth to grow.
Let's talk about opportunities, because you still like this AI universe.
I really do.
That's where the opportunities are. Software, we had Tyler Racky here earlier.
He covered that.
Yeah, he covered it pretty good. He covers it every day. It's like, what are you doing today? I'm working on Microsoft.
We'll concede that to Tyler.
Okay. Taiwan Semi is interesting.
Yes.
They've been up and down. In a way, they kind of sparked this last leg of the AI hype. And then, of course, the more recent earnings report was something of a disappointment. Long term, though, you say stay with it.
Absolutely. They have 60% of the world's market share of chips, and they also just got a grant from the Biden administration as part of the Chips and Science Act because of the subsidiary they have in Arizona. Much more upside.
All they got to do now is find someone to work there.
That's right.
They're like, the locals are nice, but, VRT.
Yes.
This has become a favorite on the street. Are you concerned it's getting a little crowded?
We were early to VRT.
Right.
Now people don't think of an industrial stock as being part of the AI game, but the data centers don't work without companies like Vertiv. They supply the energy solutions, the infrastructure, and the cooling solutions that data centers need. I think there's going to be more Vertivs out there, but for now, we see more upside.
Probably not a big hurdle to compete with them, but to your point, they've got one hell of an early start, and they built a really good reputation.
That's right.
In digital, you like a DLR, digital reality.
Yeah. In the data centers, they got a yield of 3.4%. They just announced a joint venture with Blackstone to build $7 billion worth of data centers across the world, in Paris, Frankfurt, and even the northern parts of Virginia. we think digital realty has a lot more upside.
Great stuff, Kevin. Thank you, buddy.
Thank
Have
you,
a great
Charles.
weekend.